And good session in the end.
James, it certainly was a good session, closing up about 1.2% in the end, and we actually did manage to maintain those gains throughout the day, seeing all of those sectors closing in positive territory. Certainly nice to see after we did see that pullback yesterday. So I think clearly a sign that yesterday's pullback was a little bit of a short-lived breather, and certainly seen some confidence returning back to the market today, particularly or potentially in response to that stronger GDP growth that came out of the US. Of course, we also did see that weaker Aussie dollar, which potentially added to some strength in that healthcare sector, which was the best performing sector. Some of the interesting sectors, however, was that material sector. We did see commodity prices falling, particularly iron ore, which is now sitting below $70 a tonne. But despite seeing that, as well as copper and nickel lower, we actually did see that material sector closing in positive territory, up about 1.3%. We did actually see Fortescue and Atlas Iron still coming under a bit of pressure, and we also did see some of those gold stocks leading. We saw a bit of a pickup in that gold price overnight. Financials, we did see some strength across all of the major banks, again potentially in relation to that weaker Aussie dollar, but we also did see some strength across some of those banks over in Europe. And the energy sector was interesting, given the fact that we are continuing to see tumbles in that oil price. We actually did see that energy sector holding up quite well. Overall though, fairly light in terms of volumes. We had about $3.6 billion going through in the end, but obviously this was expected given the fact that they were a little heavier yesterday with Medibank coming online, but overall a very positive day today.
Do we look at the miners? Do we look at the energy stocks, despite what is soft commodity prices at the moment?
James, look, certainly seeing those commodity prices remaining really soft, but I do certainly agree with Mike. The continuing confidence coming out of the US should continue to support that growth, but particularly after China has cut those rates, I do think that that will support growth over in the Chinese economy, and certainly will support a demand for those commodity prices, and obviously that will be good for the Australian market. So I do think potentially with a lot of those factors underpinning those commodity prices, I do think potentially we could start to see a bit of a pickup in those commodity prices, and I certainly think a lot of the falls that we have actually seen in some of those stocks have factored in some weakness in those commodity prices. Obviously looking at iron ore, the big one, it's been down about 50% or so since the start of the year, but if we do look at some of the iron ore miners in comparison, for example BC Iron down about 90% over the same period, so seeing falls almost double to that what we've seen in that iron ore price. If we look at say Atlas Iron down about 82%, and then Fortescue down about 52%. So really have come under heavy selling pressure, obviously with their break-even prices sitting at the top end of that $78-79 range, and that iron ore price sitting below $70 a tonne now. That's obviously affecting the earnings for a lot of those higher cost producers. So I think looking at the falls that we have seen in those stocks, I do think that a lot of the weakness in those prices, those commodity prices, potentially have been factored in, and potentially could start to see a bit of a floor. If we look at the opposite end of the spectrum being BHP and Rio, obviously the lower cost diversified miners, they can sustain those falls in that in those commodity prices, obviously will be the ones to survive out of all of this. They're only down about 15% or so since the start of the year. So the concern has been in terms of those higher cost producers, but as I say, I do think potentially we may have seen some of that weakness factored in, and may potentially start to see a bit of a pickup from here.
So energy plays, in particular Leanne Santos, obviously under a fair degree of pressure, as most of them have been in recent times, as we've seen the continuation of the slide in the oil price, but an investor update, and seem to be some positive murmurs coming out of Santos.
James, there were some positive murmurs. We did actually see the stock closing up about 1.3% in the end. Yesterday it was interesting. We saw the stock down about 5%. So I think there was a bit of caution there from investors, perhaps anticipating a bit of a cost blowout or some sort of surprise, but it didn't seem like that came through today. And overall, I think the update did look fairly positive. We were obviously looking out for a number of key factors. Firstly, in terms of any detail on that Gladstone LNG project, obviously they have confirmed basically what they've already reiterated previously, so there were no surprises. It is on track and on budget still for production in the second half of 2015, so that was positive. Secondly, we were looking for guidance in terms of their production coming into 2015. It has narrowed a little bit in 2014, so that was a little bit disappointing, but overall confirmed production for 2015 and targeting some very strong growth coming into about 2020, so certainly indicating that the company remains positive in terms of growth in a lot of their assets. But thirdly, we were also looking out for how they are actually managing falls in those oil prices and that environment that we have been seeing. They are continuing to look at reducing costs, so by about 9% in 2015, and obviously reducing their capex by about 20% or so. So we certainly do remain fairly confident in the fact that they potentially can sustain further weakness in those oil prices. So overall, I think the update did look very positive. Our view still remains quite positive on this stock, particularly in terms of their growth assets. And their balance sheet also does look fairly strong. They have liquidity there of about $2.1 billion. As you say, it has been under a bit of pressure since the start of the year, down about 20% or so in comparison to those oil prices, which are down about 30%. But we know that they are trying to move away from being more of an oil producer to more selling gas, so potentially should protect it a little bit in terms of any further falls in that oil price. But overall, a positive update and like the outlook.